Valentis Advisors, who's joining in now. Jyoti, good morning. Thank you for joining in. What have you made of the earnings season so far, at least for the IT companies that have reported so far? Well, they have been flattered to receive, if you could say that. You still have Infosys reporting results tomorrow. But what about the others, the banking names, the HDFCs and the ICICIs? They've delivered on their numbers. The other private bank was a disappointment because of asset quality concerns. The mid-sized banks face margin issues. What do you make of the banking numbers so far?
Yeah, so when we started the earnings season, expectations have been low. Generally if we take the consensus numbers, the expectation is we'll do like a 5% earnings growth for this quarter. And so far, if you take the aggregate of the results which are coming in, they're more or less in line with expectation. That if you strip out all the extraordinaries, which is what we tend to do, earnings growth has been flat to like slightly up. Like you said, some of the banks have done better, but there again, there was expectation that the NIMs will be lower because of the interest rate cut which we have seen. And given that expectation, banks have more or less met the earnings expectation. Again, if you look at the IT names, generally everybody was expecting it to be a very soft quarter with guidance also being muted, and that's the way it has really played out. So no major surprises or disappointments, but it's been like a lackluster expectation which is getting met. We're not really seeing any big surprises coming through.
You're saying earnings have been flat to slightly up, right? X of any exceptional items.
Yeah.
Okay, but that's still lower than the expectations, right? Which were in mid-single digits. You said 5%.
Yeah, so but what's happened, Reema, is like the tech companies have come in at the banks. So banks are actually going to drag earnings for this quarter because most of the banks are going to see a drop in NIMs. And because of that, banks actually are contributing negatively to the earnings growth for the quarter. So we've had the banks come in. Some of the other ones which are probably going to be stronger are yet to come in. Like pharma will be probably double-digit growth, so will chemicals, so will cement. So some of these numbers, as they come in, this will probably boost up the average a bit.
Okay. Jyotivardhan, I wanted to understand about these big management or leadership changes that are happening across the board, right? And you just heard Nimesh talk about that as well. There's something happening at Bajaj Finance. Then we are also watching out for that announcement or IndusInd CEO. What is your take on this entire process or this entire change that comes by? And in that case, which stock do you think tends to benefit the most out of the ones that Nimesh mentioned and the others as well?
Okay, so I didn't really hear the full thing which Nimesh was talking about. But in general, leadership changes quite often lead to a change in where the company is going, and that's why it's treated positively. If you look at banks, across the world, whenever there's a leadership change, what you find is that initially the new leader tends to do a big write-off in the first, quarter where he takes over, or the first 2 quarters where he takes over, and then he's got a clean slate with him. So then, things start to look very good for him over the next 2 years because he's done a lot of the write-offs on the doubtful debts. So in general, we've seen leadership changes across the world being taken positively by the market because there's a fresh change which comes in. And, ultimately for us, we do track, especially in the banks, when the, new CEO going to come or when the existing CEO's term gets over, because that is one indicator of what you really want to do. It may cause some short-term uncertainty on who takes over also.
What about Zomato or Swiggy? Is it a part of your portfolio? Is it a must-have? I know valuations are prohibitive at these levels. I think Zomato is at 70 times forward multiple. But what is the thought process behind these companies?
So, Reema, for us, most of these high valuation, it doesn't fit with our philosophy because we generally tend to have the CU's philosophy where we want the undervalued stocks which are underperforming and undiscovered type of stuff. So we don't really own a lot of these platform companies. In general, see, we think all of these companies will grow much bigger than where they are today. It's because, more and more habits are changing of the consumer. And so people want to order in home, and this is platforms that proved like a good way for them to order in home and get the dining experience without really going out to dine. But it's what you pay for it, what the stocks are valuing today, and on that measure for us, we are actually very, very conservative on valuations.
What about pharma, Jyoti? Because you're counting down to the August 1st deadline when it comes to tariffs. And there have been a lot of news flow with regards to a lot of these pharma names, be it Glenmark, be it Wockhardt. Laurus is at a 52-week high as well. What do you anticipate this time around? Do you believe that this quarter will be able to justify the kind of moves that these stocks have seen despite a potential headwind that's coming in a few days from now?
I would be very happy if the tariffs are frozen in the US. Because, what has been dogging the stock, if you see a lot of them which are not performing, it's just the fear that we don't know what the tariff is going to be. Because somewhere there's a mention that it could be as high as 200%, which I don't think is going to happen because, ultimately the US consumer will have to pay a lot of that 200% tariff. So, if we get a closure that we know this is a tariff, it gets easier to, calculate some impact of on earnings, and so we know that where the stock should be valued. The uncertainty has been hitting a lot of the US generics. So if you see, pharma has been into two. The US generic companies have actually not done well over the last few months, ever since the tariff talk started. But the rest of the pharma has continued to do well. It's a sector which we like. So, we'll be very happy if we get a closure on the tariffs because probably some of the US generic names will look interesting after that. We like the CDMO space because that's something which we think has got a multi-year growth ahead of us. So pharma is something which we like, and we would probably buy more if we can, get some closure on the tariffs coming through.
Okay, all right. Take that point. Thank you so much, Jyotivardhan, for joining us and taking us through your sectoral picks or in terms of the market moves going forward as well. Thank you so much for joining in. Time for a short break. We'll get you more on the markets on the other side.